Zaim Asari, Chief Legal Officer of LightSpark, is going to share her thoughts with us. I'm so delighted you're here. You're
So delighted.
knowledgeable about both stablecoins and market structure, which we're starting with in this committee. And all of us get questions about the use case for these assets, people who don't work with them on a regular basis.
Huh?
And I know you have expertise in what makes stablecoins valuable to the economy, the manner in which stablecoins operate, and all of the
Here we go.
legislative approaches to stablecoin legislation and regulation. So we're very much looking forward to your testimony, and thank you very much for being here. The floor is yours.
Thank you, Chair Lemes, for that very kind introduction. Thank you, Ranking Member Gallego and members of the subcommittee. I'm really happy to be here speaking on this topic today. I'm co-founder and chief legal officer of LightSpark, a company that is building modern payments on the Bitcoin Lightning Network.
Ha!
Before LightSpark, I was a partner in the financial institutions group of Davis Polk, where I advised a wide range of banks, stablecoin issuers, and crypto firms on regulatory matters. There should be strong bipartisan support for new laws to regulate stablecoins and crypto markets. They will provide clarity, protect American consumers and markets, and help bring the United States back to the cutting edge of innovation in financial services. These new laws must be based on strong fundamentals that reflect our best views about the benefits and risks of stablecoins and crypto markets as
You work on the Bitcoin network?
they should exist, not only based on the industry as it exists today. Today, we can email, text, or call each other instantly and for low cost, no matter what brand of phone or computer we're using. Payments can and should work the same way. Stablecoins can help make this a reality. Among other uses,
Just think about your Venmo or your Cash App or your PayPal, whatever. They always charge you a fee. A fee for fucking everything. Every time you want to transfer something, it's a fee. But if you use XRP in the XRP ledger, the fee is negligible for transferring your value. I mean, think how big of a loss you're taking every year just from moving fucking money. And these bastards, these banks are sitting in the middle, just all of it.
they enable the 24/7 transfer of dollar value to anyone online. They are uniquely suited for online commerce when they are properly regulated.
Yeah, they're just gumballs in the machine. And RLUSD is setting the standard for what a proper stablecoin should be. Fully audited, fully reserved, and everything in circulation can be accounted for, and it settles from 3 to 5 seconds over the XRP ledger. It's just transferring value, okay? And all these other RLs, like Brazil's launching one into the gumball machine. That's what we want, people. That's what we want. And then guess what they're gonna do? If you wanna, you gotta wanna pay them in RLUSD through XRP into Brazilian fucking nut coin, whatever. I don't know what they're gonna call it.
My comments today will focus on 3 fundamental aspects of stablecoins with recommendations for legislation. Some of these points are already well addressed in bills being considered by the subcommittee and should be kept at the forefront as these bills move through Congress. The first fundamental is that the true innovation of stablecoins is in their potential to be digital cash, always on, non-credit money. Unlike bank deposits, the money value of a stablecoin is supported by full reserves, not FDIC insurance or the creditworthiness of the issuer. This means that
And as the Federal Reserve they're gonna get that audit. They're gonna, Jerome Powell's gonna take a shit. It's gonna be a fucking hilarious meltdown. People are gonna start dumping dollars, and we're gonna need a replacement for what is the legal tender because the Fed fucked it, and now we need something else as a legal form of legal tender. And this is what all these laws are about. They're getting set up for this. And once the laws go live, man, look out.
someone using a stablecoin to pay or accepting a stablecoin for payment should not care which stablecoins are being used. This is not true today. With you,
because they can settle through a neutral reserve. XRP, right then and there.
Users in markets correctly distinguishing between USDC, USDP, USDT, and so on.
Yeah, Tether's coming down.
Stablecoins as digital cash can be achieved through the following mechanisms. Stablecoins must be...
How could she even mention USDT without like even saying how they're not fully fucking reserved and they never post on timely audits by the appropriate third parties? It's
backed one-to-one with reserves of high-quality liquid assets.
High quality.
With carefully calibrated capital buffers and liquidity requirements.
And the tokenization is going to make gold a liquid asset because then you can trade the non-fungible token of it. Yeah, they'll move the sticker, who's got what on the fucking basement of the Fed, or, hopefully that's shut down and it's just Fort Knox.
Issuers must be available to redeem the stablecoin at face value, for example, $1. And in resolution or bankruptcy...
And with more speed, you then stabilize exchange rates itself. A lot can happen over 3 to 5 days that fucks with the value of a currency between some different nation that all of a sudden now they have, leukemia everywhere. It's such random events happen to all these markets all around the world and whatever country and whatever geography they have, and it always messes with the exchange rates between currencies, and somebody's always losing money. And not to mention some of them freaking fail in the first place. So you could wait that 5 days and it still fail. I mean, think about how that would impact your business. You're trying to do a $20 million deal, and you need that cash because you got, Joe the plumber and the construction worker waiting on the site, but you need that money coming in.
Of the issuer. Reserve assets should be segregated and beneficially owned by stablecoin holders. These assets should be quickly liquidated and paid out to these holders in an orderly manner. The second fundamental is that stablecoin issuers should compete based on innovative payment use cases, not on reserve design.
What she's saying is, how quick does it settle?
Of course, this requires getting reserve design right. Reserve requirements that are too permissive,
which RLUSD is doing, and eventually, Ondo's tokenizing treasuries for it to collateralize it. But eventually we're going to tokenize gold. That's why all this gold's flying back, okay?
Use incentives for stablecoin issuers to innovate or compete based on the usefulness of their stablecoin. At the same time, overly conservative reserve requirements make stablecoin issuance...
What's more useful than a stablecoin that floats over a ledger through a XRP gumball machine and settles in 3 to 5 seconds? That's the use, is the time.
Attractive only to the largest market participants, or for those that can subsidize stablecoin issuance with other business. In addition to striking the right balance on reserves, stablecoin legislation should promote a diverse and competitive stablecoin issuer landscape. It should allow for issuers of different types. Banks...
Out of all the competitors out there who's producing a stablecoin, which one has had, 10 years worth of development? And just striking deals and getting NDAs and, working with all the people, all the stakeholders in all the institutions, and they got to dole out that escrow to them because everybody wants some. I love everything just coming together. I love it.
Bank affiliates as well as non-banks with different kinds of business models should establish minimum operational and compliance requirements for all issuer types. It should address...
They have to be a real company, okay? They have to be compliant. They have to have licenses. They have to... God, come on, man. Nobody should even be talking about any blockchain company that doesn't meet this standard, because the law's coming. Because the law's coming.
Address potential conflicts of interest or other concerns about affiliates through limits on affiliate transactions, and should impose common enhanced standards for all issuers for access to Federal Reserve payment systems and master accounts. This approach will create a more...
We don't know if they're going to be there. So we're going to need a replacement for that as well. And who's already meeting all of these standards this broad's laying out? Like, and on the rest of them. Like, who's already meeting these standards? That's the point. Before even the laws drop, yes, we do need the laws, okay? But what's already meeting them? Like, if they're starting this race after the laws, they're way behind Ripple, way behind, like years behind. All right, and they haven't survived an SEC lawsuit, and the government up their ass for all their financials, which spared them from, getting really touched by all this dark money laundering that's going on. And that's what all these Congress people are fucking thinking about, man. How else have they been getting this money back to them?
Competitive, multi-issuer world.
Which could be why they're holding on to the Epstein list, Like, it's good leverage. It's good leverage. I mean, they did the evil shit. They will pay. But, we need laws passed, and these people are still in that fucking seat. I wish they would resign, but, and then we get the governor to pick a replacement in some instances, and then, we get another election coming on in 3 months. Meanwhile, everything's fucking teetering. So, if they if it's awful that it happened, but, if they're using it to leverage to get these fucking laws passed to help save our nation, save our economy, save everybody else, what can you do?
And incentivize issuers to compete on payment solutions and utility rather than on reserve size and returns. Third, we should use stablecoin legislation as a way to level up our approach to financial crimes and compliance and privacy. The industry has built new compliance tools, including chain analytics and technology to freeze or block stablecoin transactions.
AI is going to help that a lot. Whole lot of AI going around.
To meet BSA requirements that have long applied to stablecoin issuers and those providing money transmission services using stablecoins. Similarly, the industry is developing new tools to address privacy considerations raised by on-chain transactions, which can reveal sensitive information about consumer and business payments and can put user privacy at risk. These tools are a critical way to advance new and better technologies for better, more efficient, more informative, and less costly financial crimes and privacy compliance. While these technologies are designed to benefit stablecoin use, they can also be leveraged more broadly in crypto and even in traditional financial services. Stablecoin legislation should set strong and clear standards.
So all you meme coin bros, you better read this fucking law.
Standards for illicit finance and sanctions requirements. It should also provide for time, flexibility, and incentives to develop new and better ways to address these requirements.
Now that the laws are really getting talked about and formed, and it's going to be going up to vote here real soon, no wonder why we're seeing this massive sell-off in crypto. Everybody's getting out, man. And then, there's a lot of margin calling going on, too, because, the world's fucking teetering. We have great news, Ukraine, peace, Middle East is getting sorted out, all these other good things. But, the enemy has a vote. The enemy always has a vote. So, who knows what shoe's going to drop next. But guarantee it's going to be freaking economic. All right, and we're already seeing a bit of it going on, all the shaking going around. Just stay frosty, my friends. The law's on its way.